Hey, what's happening? Trader Tim from EminiMind here. Wanted to do a trade recap. It's Wednesday, August 6th, and actually had a handful of trades today, mix of winners and losers. So I thought it'd be easier to go through in a video and show you what was going on here. So we opened up with an inside day inside of yesterday's range, and we were right near the close of yesterday. We filled the gap right away, so there was no 15-minute opening range breakout play. You can see on the 15-minute chart these first couple of candles, kind of a doji spinning top, very much indecision. Moving sideways through the first hour and change. Our breadth and AD line were both pretty flat, and not a lot of extreme nicey tick readings right out of the gate. So if we go down to the 1 minute chart and get rid of this, scroll back on our 512 tick chart, we'll go through our trades from this morning. The first one, 639. The first one was a little hammer long. It's kind of hard to see now. But this hammer down here was right at the gap fill, and kind of just the tail stuck down just below the low of the day. So I took that as a long, with the intention of maybe rising to the other end of the range. We did do that, but unfortunately I was taken out of that one. This candle here filled me, and then it sold off and kind of formed this bearish engulfing candle, and then it just ripped, not ripped, but started to rally a bit stronger. The next one was a retracement at 647. I chose, so the retracement that I took was kind of based off of this pattern here. Here's the 50%, but instead of taking this hammer directly, because we had the opposing tails, one tail sticking up, one tail sticking down, typically this hammer is the better play because it's with the trend. Uh, well, I say that the trend was technically up at this point. We have this little bullish engulfing pattern, a higher high, and then this hammer becomes a higher low, but it's pretty early in the day. So really, this is our trade up until that point, and we're going pretty sideways. So even though what I would call kind of the micro trend is up, we're pulling back to the 21. The 21 is rising. You can look for those subtle cues when you're moving sideways. There can still be some subtle cues of a micro trend, but rather than taking the hammer outright, I waited because I wasn't sure if we were just going to kind of poo-poo out and go sideways here. So I let it trade off the 50%, and then I drew up the first 512 tick chart in that same direction, 512 tick drawing, and took it at 34.75. So a little bit higher entry, but it gave me a little bit more confirmation, and in doing so, in order to form this little 512 tick chart, we would have had to break the hammer's high. So, and we'll come back to that a little bit later in the video as well. So, took that one long, just a small pullback, came right down to the 50. Once we went past this negative 23, I had first drawn up the 50% like that. Once we went past it, then I just came in and trailed each candle from there. So that one was for about 4.25 points, and then the next one was where was the next one? 741. Nope. Next one was 711. So 711, and that was another retracement. Oh, you know what? That was the double top. It wasn't a perfect double top, but it was pretty dang close right here. And so we came up, broke the 30-minute high. So 30 minutes of trade took place. We broke above the 30-minute high, put in this little spinning top, and then came up, made a double top. Again, it wasn't a perfect double top, meaning the highs weren't exact, but a tick off is close enough. And then we started to fall back down. So we were going up in this nice series of higher high, higher low, higher high, higher low, higher high, higher low. And then right here, we broke the swing low. And when we did that, I drew up the halfway back short, seeing that, okay, the target is targeting the top of the 30-minute range. The breadth and the AD line weren't super bullish. You kind of we've been in this 1-to-1 all day. And so when you have a 1-to-1 breadth, you have a much stronger chance of the market kind of reverting to the mean or coming back to the midpoint, not breaking out, not getting follow through. So my thought was, well, I've got room to get to the 30-minute high, and if it can keep going after that, then the next stop would be the full halfway back of the day, and then after that, it would be the other end of the range. And so yesterday, I put on a trade right at the high of the morning, and unfortunately, I got ticked out before it was able to really sell off. So kind of a little redemption here. Was able to get short and then rode it down into this area where I started to trail each candle. So I'll always start by trailing the next 61.8 when we're at the negative 23. And then if we do start to kind of nosedive, then I'll just come in and do my best to trail each candle by a tick or two. So that one got me about 6 points, and it did go all the way to the other end of the range. Then the next trade, let's see, 711, 741, 730. So this one was kind of on the other end, a double bottom. This one had this clean double bottom right at the 30-minute low. I drew up the halfway back long. This one actually took me out. I got stopped out to the tick for 2 points before it rallied. Even if I wouldn't have gotten stopped out, the next course of action there would be to draw the next 50% retracement and then move your stop to break even. And so would have been taken out for break even because it retested again. I likely wouldn't have been in this leg up here. So those were all the three retracements for the day. So it's about 8.5 points on those per contract. And then I ended up with another 1 minute trade up here at the top of the 30-minute range. I took this little inverted hammer short. It got a initial push down, and then it just came right back up. It was kind of counter trend. The 21 was pointing up, but I thought, oh, we're right on top of the 30-minute range. The entry would push us back into the 30-minute range, and then maybe we can go back to the other end. So that was about now, a little over an hour into the day. So that one didn't get the follow through, so I just called in the morning. So all right, morning. No big home runs or anything, but just wanted to run through. A lot of times these days where we do have kind of a range, a decent size range in the morning, I will end up with more trades. The days where we get trending right away, I'll tend to have fewer trades, but oftentimes I can stay in them longer because just by the nature of if we're trending, I can get in and then just trail my stop. So that's what I had for today. Be very cautious in the month of August. For a number of reasons, the month of August can be very weird and wonky and not as tight and clean with adhering to setups. I've found things are like this halfway back down here, down at lows. It's trading into its 61.8 and then retesting that same kind of 61.8 and then getting the move up. For whatever reason, you see a lot more of this in the month of August than you do the rest of the summer, let alone the rest of the year. So if you can get through the month of August unscathed, get through the about the second week in February, we'll have that next Fed meeting, and then we'll be off to the races. So hope you have a good rest of your week. We'll talk to you soon.